Welcome to the deep dive. We've got a really interesting set of source materials here today, all centered on Rolls-Royce Holdings, a company that's definitely been making waves.
That's right. Yeah, you've given us quite a stack. Articles, notes, research. It paints a picture of a business really undergoing quite a shift.
So our job here, our mission for this deep dive is to sort of cut through all that. We'll unpack these sources, pull out the key insights on Rolls-Royce, and we really need to focus on the big story, don't we? The small modular reactors, the SMRs, and that recent UK government news.
Exactly. We want to understand what it all means for the company and, for you, if you're looking at this from an investment angle.
Right. What does it actually mean?
And importantly, while SMRs are getting the headlines, and they are a huge part of the story in these sources, we can't forget the core business, can we? Civil aerospace, defense, power systems, their current health really underpins everything else. We'll definitely get into those too.
Okay, good point. Let's dive straight into the SMRs then. It's being talked about as, well, potentially transformative for Rolls-Royce.
It really is. And the key moment everyone's talking about, it just happened. Juneteenth, 2025. The consortium Rolls-Royce SMR leads was officially named the preferred bidder by Great British Nuclear, GBN. Okay, preferred bidder. That sounds significant, more than just being shortlisted.
Oh, absolutely. It's a major endorsement. It gives them what the sources call a critical first-mover advantage here in the UK nuclear scene. And it potentially sets them up nicely internationally as well.
So what happens next? What's the path forward from here?
Well, the sources lay it out pretty clearly. Contract talks with GBN kicked off basically straight after that announcement in June. The aim is to get that contract signed and sealed, and crucially, get the sites allocated later this year, so sometime in 2025.
Still this year. Okay.
Yeah, and there's another date mentioned, March 2026, for awarding contracts for the owner's engineer framework. Hitting these deadlines, that's really vital if they want to keep that early to mid-2030s target for getting the first units up and running. Right, keeping things on track. And how many units are we actually talking about in this first phase in the UK?
The initial commitment under this preferred bidder status is for 3 SMR units.
3 units, okay. And the government funding, I saw a big number mentioned, something over £2.5 billion.
Yeah, that figure's out there. But the sources are careful here. That pledge, the over £2.5 billion, is for the entire UK SMR program in the spending period. It's not just for Rolls-Royce's first 3 units.
Ah, okay, so it covers other things too.
Exactly. Things like GBN's own costs, site prep, maybe support for other parts of the supply chain. This specific money for the Rolls-Royce units, that's still being hammered out in these contract negotiations. So the government still has, leverage.
Got it. Preferred bidder status is huge. Program funding is there, but the exact deal for these units is still TBC. Makes sense. What about the regulatory side? Nuclear is always complex there.
Yeah, and this is where Rolls-Royce seems to have a real edge, according to these sources. The big hurdle is the Generic Design Assessment, the GDA. It's a rigorous safety and design review.
And they're quite far along with that, I gather.
That's a key point.
Sure.
They finished Stage 1 back in March 2023. Stage 2 was done July 2024. They actually started Stage 3, the really detailed assessment part, in August 2024.
Okay.
And they're targeting completion for that Stage 3 by August or maybe December 2026. Now, the sources report that puts them maybe 18 months ahead of competitors in the UK process.
18 months ahead. What does that actually give them, practically speaking?
It's what one source calls a regulatory moat. It's a massive advantage. They've basically passed the toughest exams while others are still studying. It de-risks their UK timeline, obviously, but is also huge validation for exports.
Right. It tells international buyers the design is solid, already vetted.
Exactly. It shows it's well down the road in a very respected regulatory system.
Are there other regulatory hurdles beyond the main GDA, though? Things that could still slow it down?
Oh, sure. The sources mention things like environmental impact assessments, EIAs, and then the specific site licensing. Those take time, too. Yeah. The government keeps saying they want to streamline things, slash red tape.
Which sounds good on paper.
Right. But the sources also point out this delicate balance. You need speed, but you absolutely cannot compromise on public trust and safety. Any hint of cutting corners could backfire badly, causing far worse delays through public opposition or legal challenges.
Yeah, you definitely don't want that with nuclear. Let's switch to the tech for a sec. What kind of reactor is it? Anything unique?
It's a pressurized water reactor, a PWR. Mm-hmm. That's important because it's a very common, very proven technology base, not some radical new physics. Their specific design is 470 megawatts electric, so quite powerful for an SMR, bigger than some rivals in the bid.
Okay.
Designed for a 60-year life, uses standard nuclear fuel uranium dioxide, UO2, which helps with fuel supply. And one technical point mentioned is using boron-free control for routine reactivity adjustments, which can apparently simplify things and reduce some waste streams.
Okay, so proven tech base, decent size. But the real kicker, the thing the sources really hammer home as the commercial edge, is this modularization idea, isn't it?
Absolutely. That's the core concept. Instead of a massive, complex construction site build, the whole plant is designed around standard modules, 1,500 of them.
1,500 modules.
And the plan, the really ambitious part, is that around 90% of the plant gets built in factories, off-site, under controlled conditions.
Right. And the logic there is?
It's about shifting complexity. Less tricky work on the actual construction site, shorter build times compared to traditional large reactors, better quality control from factory production, and this is the big hope, lower overall costs. It's basically trying to apply manufacturing principles to nuclear power.
And building in factories presumably helps with using UK suppliers.
That's the goal. They're aiming for high UK content, maybe around 80%. And again, that GDA lead we talked about. It's seen as crucial for validating this whole factory-built design for export, too.
Okay, let's talk money. From an investor's point of view, when does this SMR division actually start making money? Because building these things sounds like it costs a fortune up front.
That's a really critical question the sources address. The SMR division is, right now, burning through cash. It's in a heavy investment phase. It's expected to be a net cash consumer for, get this, the next 5 to 7 years.
5 to 7 years. Wow.
Yeah. Those first units won't be generating significant revenue from selling electricity until the early to mid-2030s. So it's definitely a long game.
How have they funded it so far, then?
Well, historically, there was a $210 million UK government grant for the second phase of development. That was matched by $280 million in private money.
Private money from Rolls-Royce itself.
About $50 million came from the main Rolls-Royce group, yeah.
Yeah.
The rest came from partners like the big U.S. utility constellation who've invested. And now they're talking to the government about how the revenue will work once they are operating. Things like a contract for difference, a CFD.
A CFD. How does that work, roughly?
It basically guarantees a certain price for the electricity they generate. The sources mention a possible target price of around £16.70 per megawatt hour. If the market price for electricity is lower, they get topped up. If it's higher, they pay the difference back. It gives investors that long-term revenue certainty you need for these massive projects.
Okay, so CFDs provide revenue stability later. What about the big upfront factory costs?
Good question. They've made some initial investments, like a £2.7 million module development facility in Sheffield. But the sources note that the really big money needed for the full-scale manufacturing factories. Well, the details on that, the locations, the exact investment, haven't been announced yet. That's still to come.
So profitability really hinges on making this factory approach work at scale.
Exactly. It all comes down to achieving cost reductions on the later units, what they call nth of a kind, or NOAC units. They need those factory learning curves and efficiencies to kick in and bring the price down significantly after the first few are built.
I've seen some wild numbers thrown around about what this SMR business could be worth to Rolls-Royce shareholders. What do the sources say about those?
Yeah, the sources mention some of those external, and it's important to stress, speculative valuations. Citi, for example, apparently suggested SMRs could add maybe 10-15 pence per share to the value.
Okay, 10-15p.
But then you see other calculations, like one mentioned from a Reddit user, which obviously comes with huge caveats, but based on making a lot of optimistic assumptions about sales, volume, price, margins, that suggested a potential EPS contribution of maybe 56 pence per share.
Whoa, that's a massive difference. 10p versus potentially over 50p?
Right. And that huge range tells you everything about the uncertainty here. These are not company forecasts. They're purely external speculation, and they totally depend on Rolls-Royce actually pulling off this manufacturing revolution, hitting those cost targets, and winning lots of orders. It also highlights that government support, like grants or those CFDs, is pretty much baked into the model for getting this off the ground.
Okay, let's focus on the pulling it off part. What are the biggest hurdles, the key risks for the SMR project, according to these sources?
They're laid out quite starkly. Regulatory delays are always a risk, not just finishing the GDA, but also those subsequent EIAs and site licenses. The supply chain is a really big one. Building up a UK supply chain that's qualified for nuclear work and at the scale needed. That's called a substantial undertaking and listed as a major execution risk.
Okay, supply chain. What else?
Public perception is always there with nuclear, isn't it? Concerns about waste, safety, cost that can fuel opposition. Then there's the basic economic viability. Can they actually compete on cost with other energy sources in the long run? And, overarching geopolitical risks that can affect any big international project.
How are they trying to tackle these risks? What are the mitigation strategies?
Well, using the proven PWR technology helps reduce the technical risk. That GDA lead is obviously a huge mitigation factor for the UK timeline. They're actively working on building that UK supply chain, aiming for the 80% content. They've also formed partnerships, like with Siemens Energy for turbines. But the sources are clear. Scaling up manufacturing from development to full-on factory production is a massive challenge they acknowledge.
You mentioned public perception and waste. How are they addressing that specifically?
It's clearly flagged as something needing constant effort. They do have a waste strategy outline projecting about 285 cubic meters of spent fuel per reactor over its 60-year life, and they stress that waste prevention was part of the design thinking. But the key message from the sources is that things like proactive communication, being transparent, engaging with local communities, that's absolutely vital to build and keep the public trust needed to get these built without major pushback.
Right. Makes sense. Okay, that's the UK picture. But this isn't just about the UK, is it? What's the global plan?
Definitely not just the UK. The clear strategy outlined is to use the UK progress, getting preferred bidder status, the GDA lead, and eventually having the first reactors operating as a launch pad for exports.
So the UK is like the showcase.
Exactly. A vote of confidence, as one source puts it. Having a working plan to the UK is seen as absolutely key for proving the technology and convincing international customers.
Any specific international interest mentioned? Where are they looking?
Yes, a few key places. The Czech Republic is a strong one. They were selected there in 2024. The state utility, EEZ, has actually invested in Rolls-Royce SMR, and there's an exclusive agreement to potentially deploy up to 3 gigawatts.
3 gigawatts, that's significant.
It is. And in Sweden, they've been shortlisted by Vattenfall, another major utility. They're also actively marketing in the Gulf states and other parts of Eastern Europe.
And the potential global market is huge, right?
Potentially massive. The IEA estimate mentioned is up to nearly $500 billion by 2050. But, and it's a big but, turning that potential into actual orders for Rolls-Royce really depends on them delivering successfully on time and cost-effectively back here in the UK first. Plus, you always have geopolitics influencing nuclear deals.
What about the US? Huge market, but different rules.
Interesting point. The sources mention Rolls-Royce Liberty Works is involved in something called Project Pele for the U.S. military, developing a microreactor. But that's separate from this larger 470 milliways civil SMR. There's no specific strategy detailed in these sources for bringing the big SMR into the U.S. civil market, which would mean going through the whole U.S. Nuclear Regulatory Commission licensing process.
Okay. And are these SMRs just for plugging into the national grid? Or are there other potential uses being discussed?
That's another potential growth angle mentioned. They're definitely being looked at for more than just grid power. Powering massive energy-hungry data centers is a big one. Hyperscalers are apparently exploring options. Even the U.S. Department of Energy is looking at it.
Data centers, right, with AI and everything.
Exactly, and also providing heat for industrial processes. The fact that SMRs could potentially be located closer to where the power or heat is needed is seen as an advantage.
And the value isn't just selling the reactor itself.
Correct. Just like with their jet engines. The long-term idea is that a big chunk of the value comes from servicing, refueling, and eventually decommissioning these reactors over their very long 60-year lifespan. That could mean decades of recurring revenue.
Okay, so a really deep dive on SMRs, the huge potential, but also the significant risks and the long timeline. But you said at the start, we can't forget the core businesses. They're the engine room right now, yeah.
Absolutely. If you're looking at Rolls-Royce today and for the next few years, the performance of these core divisions is fundamental. And they seem to be doing pretty well strategically positioned, too.
Okay, let's run through them. Defense first.
Defense is really capitalizing on the current global situation. You've got increased NATO spending, big UK defense investments. That's driving demand. The sources suggest expectations for more growth in sales and better margins here.
Anything specific in the UK that benefits Rolls-Royce defense?
Oh, yeah. Over £6 billion is going into the UK's submarine industrial base in the current spending period. Rolls-Royce builds the reactors for the UK's nuclear submarines at Derby, and they're supplying them for up to 12 new subs under the OUK Pact. That's a massive decades-long program.
12 new subs, wow.
Yeah. And they've had other recent wins, too, like a $563 million contract just in May 2025 to support Typhoon fighter jet engines, which also helps maintain key UK skills. Plus that huge $2.6 billion deal to re-engine the U.S. Air Force's B-52 bombers with their F-130 engines, running right through to 2038.
Okay, solid performance in defense. What about civil aerospace? That's been through a tough time but is recovering.
A really significant turnaround there, driven by the big rebound in air travel globally. Engine flying hours, that key metric driving their service revenues, were back above pre-pandemic levels by the end of last year, 103% of 2019, and hit 110% in Q1 this year.
And that flows through to the bottom line?
Directly. The operating margin in civil aerospace jumped to 16.6% in 2024. They're also working hard on those Trent engine durability issues we heard about previously, the Trent 1000, the XWB.
Right, the reliability problems.
Yeah. Sources mentioned redesigns, testing new parts like a new turbine blade for one Trent model that should massively increase how long it can stay on the wing. They're putting specific measures in for engines operating in harsh environments and managing the required airworthiness directives. It's all part of a big £1 billion effort they call #Design2Last.
And the next big thing for them is UltraFan, their next-gen engine.
Progress there, too. They started building the first demonstrator engine. Key bits like the composite fan blades and the power gearbox are being made. The ambition for UltraFan is huge, 25% more fuel efficient than the original Trent, fully compatible with sustainable aviation fuel from the start.
Sounds impressive.
Ground tests have been promising, apparently, but the real test is proving it works reliably in actual service.
Any big potential orders or opportunities for civil aerospace coming up?
Well, there's always talk of a large China order for Airbus planes. If that includes wide-body jets using Rolls-Royce engines, that would be significant. And longer term, there's speculation they might try to get back into the narrow-body market, maybe partnering with someone like Airbus for the successor to the A320neo in the late 2030s, possibly using UltraFan tech. Their business jet side is also doing well with the Pearl engines.
Okay, still turning around nicely. Lastly, power systems.
Power Systems is also performing very strongly, hit a 13.1% margin in 2024, and strategically, it's really well positioned to benefit from that massive surge in demand from data centers.
Ah, yes, the AI boom needing power.
Exactly. Cloud computing, AI, it all needs huge amounts of power and critically reliable backup power.
And they're investing to meet that demand.
They are. Just announced in June 2025, a $24 million expansion of their plant in Mankato, Minnesota. The plan is to more than double production of their big M2 Series 4000 backup power systems by 2026, specifically because data center demand is so high. Sales for those systems jumped almost 50% last year. That one investment supports over 100 U.S. jobs, too. And beyond data centers, their whole portfolio, diesel, gas engines, batteries, microgrids, puts them in a good spot for the broader energy transition.
Okay, so we've covered the SMR future, the solid core businesses. Let's bring it all together. What's the overall financial health picture and the story for investors based on these sources?
I think the overwhelming message from the sources is one of significant financial turnaround. The transformation program under the current CEO to fund Urgent Bilgic seems to be delivering dramatic results.
The numbers back that up.
Clearly. 2024 was strong underlying operating profit, hit $2.5 billion, margin was 13.8%, and free cash flow was very healthy at $2.4 billion.
And the debt situation, that was a big concern previously.
Completely transformed. They went from having $2 billion of net debt to actually having net cash of $475 million at the end of 2024. That's a massive swing. And it's led to them regaining investment-grade credit ratings with a positive outlook.
And shareholders are seeing benefits now. Dividends, buybacks.
Yes to both. Reflecting that stronger position, they brought back the dividends 6.0 pence per share for 2024, paid in June 25. And they kicked off a 1 billion share buyback program back in February 25. And those divisional margins we mentioned were strong across the board in 24. Civil at 16.6%, defense 14.2%, power systems 13.1%.
What about looking forward? Have they given new targets?
They have. For 2025, they're guiding for operating profit and free cash flow, both around 2.7 to 2.9 billion pounds. But the really big news was upgrading their medium-term targets for 2028.
Upgraded targets.
Yeah, significantly. Aiming now for 3.6 to 3.9 billion pound operating profit by 2028, margin of 17%, free cash flow 4.2 to 4.5 billion, and return on capital between 18-21%. And maybe the most telling thing they now expect to hit those ambitious 2028 targets 2 years earlier than they originally thought.
2 years earlier. So what's driving all this improvement and confidence?
The sources point squarely at the execution of that transformation plan. focusing the portfolio, driving operational efficiencies, optimizing commercially, changing the culture. They mentioned hitting big procurement savings targets over £1 billion by end of 2025 and improving cost ratios. The market has clearly noticed, hence the big rise in the share price. It reflects delivery on the turnaround, strong results, and that growing optimism about things like SMRs.
And ownership is mostly retail investors or are institutions involved?
Interestingly, the data in the sources shows very substantial institutional ownership, somewhere between 78% and 86%. Major funds hold big stakes, so it's definitely not thinly held by institutions.
Have they been selling off bits of the business too?
Yes. That's part of the portfolio focus. They've sold some non-core units and exited areas like electric air taxis, the advanced air mobility stuff, to really concentrate resources on the core divisions and these big strategic bets like SMR. Management seems laser-focused now on hitting those upgraded targets and keeping the transformation going.
Okay. So, for you listening, tracking Rolls-Royce, especially the SMR story, what are the absolute must-watch milestones coming up, according to these sources?
Right. What should you actually keep an eye on? Based on this material, the key SMR things are: first, getting that final UK SMR contract signed with GBN, expected later this year, 2025. That's crucial.
The actual signature. Got it.
Second, the formal allocation of the sites for those first UK units, also expected later this year. Third, watching their progress through that GDA Stage 3 assessment. Target completion is on deck 2026. Any delays there would be significant.
Okay, contract, sites, GDA progress.
Fourth, look out for announcements about where they'll build the big SMR factories and the investment involved. That's a huge piece still missing. And fifth, any more firm international orders or partnerships, especially in places like Sweden or with other big European utilities, building on that check deal. And, the flip side is important too. If, for some reason, they didn't get that final UK contract signed after being named preferred bidder, well, the sources imply that would be a major blow. It would really hit investment, their market standing, exports, and that whole supply chain effort.
Okay, that really crystallizes what to watch for. So wrapping this deep dive up, it's clear from these sources, Rolls-Royce is a fascinating, complex story right now. You've got these core businesses firing on more cylinders after a major overhaul, looking strategically strong.
Yeah, a solid foundation showing real results from the transformation.
And then layered on top, this massive, potentially game-changing bet on SMRs, huge ambition.
And hopefully digging into these sources like we just did gives you the key elements to weigh up. You've got the potential upside from SMRs, the strength of the core, but also those very real execution risks, the improved finances, and the demanding targets they've set themselves. Lots of moving parts.
Definitely. So here's a final thought to leave you with, something to chew on based on everything we've discussed from these sources. No one, anywhere in the world, has successfully built a fleet of modular nuclear reactors on a true large-scale factory production line before. Rolls-Royce is essentially betting it can be the first to crack that enormous industrial and logistical puzzle. And they're doing it while running a massive, complex aerospace and defense company that's just pulled itself out of a tough spot. So the big question is, can they actually pull off this incredibly ambitious manufacturing vision for SMRs and make it pay, or will the sheer scale and difficulty of the challenge prove overwhelming? That's really the multi-billion-pound question hanging over Rolls-Royce, isn't it? Thanks for providing the source material for this deep dive.